All right, welcome. What if I told you that a once pretty niche investment strategy is now one of the most powerful engines powering the entire Indian economy? Well, that's exactly the story of private equity in India. It's a market that's gone from the sidelines right to center stage, and honestly, understanding how it works is absolutely critical to seeing where business in that part of the world is headed.
So, here's what we're going to cover. First up, we'll see how this market really came of age. Then, we're going to crack open the Indian playbook to see what makes it so unique. We'll meet the titans, both global and local, that are shaping the whole landscape, and then dive headfirst into the fierce battle for deals. And finally, we'll ask the big question. Is this market sitting on a powder keg of cash, and what could that mean for the future?
Okay, let's start at the very beginning. The market's coming of age. And look, this isn't just about the numbers going up and to the right. It's about a fundamental shift from being this kind of alternative investment to being a core driver of the entire economy. It wasn't that long ago that private equity in India was kind of on the fringes, an interesting but, let's be honest, non-essential part of the landscape. Well, those days are over. Today, it is right at the heart of the action, fueling corporate growth and the nation's economic engine. It's become totally indispensable to the story of modern Indian business. So, how does this market actually operate? To really get a handle on the unique Indian playbook, it helps to compare it to the biggest private equity market in the world, the US. I mean, they're both trying to create value, but their approaches, they couldn't be more different.
Okay, so here's the single biggest difference. In the US, the classic move is the leveraged buyout, using a ton of debt to buy an entire company. But in India, the name of the game is growth equity. Firms aren't buying companies outright, they're buying into them. They take a smaller piece of the pie to give a promising business the capital it needs to just explode with growth. It's less of a takeover and more like strapping a rocket engine to a car that's already moving fast.
So where's all this rocket fuel going? Well, in India, it's really concentrated in three main areas: technology, financial services, and consumer goods. And this makes total sense, right? These sectors are plugged directly into the country's rapid digitization and the explosion of a huge, tech-savvy middle class. The US market, on the other hand, it kind of spreads its bets more widely, with huge investments in places like healthcare and industrials.
But where does all this money actually come from? This is where the stories really diverge. Indian firms, they often have to look outside their borders, relying heavily on global institutions for cash. The US, meanwhile, has this massive, deep pool of local capital from sources like giant pension funds. That gives it a much more stable fundraising base right at home. And that brings us to the players themselves. So, who are the titans actually shaping this market? Well, it's a fascinating mix of global giants with super deep pockets and, these nimble local specialists who have all the connections. So on one side, you've got the global heavyweights. We're talking Blackstone, Carlyle, and KKR, bringing in just enormous scale and their global playbooks. But right there, competing with them are the local champions like Everstone Capital and Multiples. Now, their advantage isn't size. It's that deep, on-the-ground expertise and those invaluable local networks. This clash of styles really defines the entire competitive landscape.
And of course, when you have all these titans in one place, that landscape gets pretty crowded. Which leads us to the central conflict in the market today, a fierce and intensifying battle for deals.
Now, to understand this battle, you have to know one key term: dry powder. That's what the industry calls the massive pile of cash that these PE firms have raised from investors but haven't actually spent yet. Just think of it as a huge amount of capital sitting on the sidelines under immense pressure to get into the game.
And here's the crucial point. You have this mountain of dry powder, all of it chasing a relatively small number of high-quality Indian companies. It's a classic supply and demand problem, and it creates an incredibly competitive, high-stakes environment.
So what does happen when you have way too much money chasing way too few deals? Well, the consequences are reshaping the entire market.
The outcome is pretty predictable, and it really comes in two parts. First, with so many buyers fighting over the same companies, the price of those companies, the asset valuations, they just skyrocket. And second, when you pay a premium price for something, your potential for a high return gets squeezed. It's just a lot harder to make a big profit down the line.
And the competition isn't just between the PE firms themselves. They're also in bidding wars with what are called strategic buyers. Think big corporations. See, a PE firm is focused purely on the financial return. But a corporation, they might be willing to pay an even higher price if buying that smaller company is a perfect strategic fit for their existing business. This just adds a whole other layer of pressure.
So this all leads us to our final and maybe most important section. Is this market just a powder keg of cash? What does the future hold when there's so much capital under so much pressure to be invested?
The primary risk, the one you hear everyone talking about, is that all this pressure could lead to less disciplined deal-making. The fear is pretty simple. With so much cash that has to be invested, firms might start making riskier bets or just plain overpaying for assets, simply to get a deal done and put that money to work.
And that really leaves us with the critical question for the future of private equity in India. With billions of dollars in play and a limited number of top-tier companies to buy, which force is going to win out? The investment discipline you need for long-term returns, or the immense, undeniable pressure to just get a deal done? The answer to that is going to define the next chapter for this incredible market.